Hey guys, Boris, welcome to the weekly technicals for SEP 4 through SEP 8 of 2016. Watch for traps. That's going to be the story, I think, next week as we kind of reverberate against what happened at the end of this week with non-farm payrolls being weaker than expected, but a dollar really putting on a very, very strong show at the end of the week. That's a very interesting dynamic because the market, in many ways, the currency market, which has been so skeptical about the idea of a Fed rate hike, is starting to really warm up to the idea and the prospect of a September hike coming up in 2 weeks. We're really now coming back off of the vacation time when the volatility was very, very low into a major week of 3 central bank meetings this week. And of course, the big lead up to the September meeting next in 2 weeks from now, which is going to be a huge tell for us. Because I think the interesting thing here is that I'm actually shocked. I was on CNBC today at how many analysts completely dismissed the possibility of September hike. Having looked at the data and having just sort of looked at the rhetoric of the Fed, it seems like they really want to go. And to me, the point being is that if they hike in September, it removes all of the pressure on them to hike in December, thus basically sort of tightening the curve by just 25 basis points into the end of the year. This provides huge amount of flexibility to the Fed, at the same time getting back their credibility. I completely changed my mind on the idea of a September hike, of going from a huge skeptic to now a pretty big believer. So we'll see how it's playing out. What's interesting is I think that the sentiment in the currency market really turned that way, certainly from a technical point of view, and that's something we're going to tackle very, very closely in the charts in just 1 second. But the bottom line is, going into this week, we have the ECB meeting, of course, which is going to be the big movement for the euro. That could possibly be a little bit more of a downside on the euro, although I really don't think this. I think the ECB is not going to provide any fresh accommodation. I think the really sort of interesting trade here that may be shaping up is just simply the old idea of what we call central policy divergence. That is, where the Fed really now, for real, starts to tighten, and everybody else, of course, remains the same, accommodative, and that disparity could finally help the dollar move to the upside. So interesting to watch. We'll take a look at the charts, but there is a very, very hidden trap in all the charts that I really want to expose for you and I kind of make you want to be aware of. There is a possibility here that all of the price action that would happen this week could be reversed in a very nasty fashion next week if the market feels like the Fed is really backing off the idea of a SEP hike, and if the ECB sort of remains relatively hawkish. So it's going to be very important to watch the price action, I think in many ways more so than even the fundamentals behind it. Aside from that, we don't have much data from Japan, so dollar-yen is really, of course, going to be driven really by the U.S. Sentiment flows, and cable remains still very, very strong. We talked about the idea that cable has really built up a very, very strong bottom off the Brexit. UK PMI services comes out on Monday. It's a huge event. Generally, basically, sort of the week is going to be very slow starting because we have a holiday in the U.S. on Monday. We're actually going to be ourselves off on Monday, so the flows are going to be very quiet, and then it really picks up as we get the RBA coming up on Tuesday, the Bank of Canada on Wednesday, and the ECB on Thursday. So just a massive amount of volatility. Generally, basically, everybody should be back from the beaches at this point, either from the Hamptons or from Saint-Tropez, and I think the capital markets are going to start to wake up. Volatility should start to expand. Let's just take a look at the support resistance levels and then really take a look at the charts, and I want to show you what I mean about the trap possibilities here. So euro dollar resistance now kind of moves down to the 1250 level. Support still at 1100, very, very key support there. Dollar yen would now really move up towards this very, very critical juncture of the 105, and support now comes in at 103 off of the 100 that we had just a week ago. And cable stays the same, 3330. It really kind of held up its levels for the time being. So let's just take a look at the charts and get much more granular into what I mean about the potential traps. You look at the euro here, and if you were to sort of take the latest signals here, clearly very negative. A very, very bearish candle. We end up on the lows of the day, big reversal, almost a shooting star. All of this stuff very positive for dollar bulls. I mean, generally, not always, but generally, when we have negative fundamentals, positive technicals, you always want to go with technicals. What I mean by this is that we had data that really wasn't very dollar supportive, and yet it was hugely positive for the dollar in terms of price action. When that happens, you really want to go with price action because price action is telling you something much more important. When it's ignoring fundamentals, it's generally a signal that the market thinks there's more to come. The critical thing, though, the critical thing here is we have to break down to the 1100 level and actually break below the 1100 level to really confirm that this is in fact a negative formation. I mean, it looks very similar to a head and shoulders. It's kind of starting to break down to a head and shoulders, but to really confirm that this is going to be a head and shoulders, we need to see the 1100 get broken. Because here's the other thing that I think is very important when you look at it technically. If we simply just test and find support right underneath here, right? And if ECB comes in even mildly hawkish and we have a sort of a reversal of flows, a move back up above 1250 actually turns this whole chart from being negative to being positive, because the chart now goes from a series of lower highs and a potential breakdown to the downside now to this particular segment where you have a series of higher lows and a breakout back up towards the 1350 level. So it's really important to watch the price action here, really important to see how it behaves, and be prepared and be very, very flexible this week to understand that you could have massive short squeezes one way or the other. Clearly, the battle between the bulls and the bears, I think, is just starting, and the volatility could really wreak havoc. So just my point is, it's a definitely negative bias to the euro. It's definitely a dollar positive move here, but be wary of selling the lows here. Be wary of falling into a trap. If price action doesn't push through below the 1100 quickly, I would start to cover my shorts here, because I don't want to be trapped in a big reversal, which is certainly could be a possibility here on a technical basis. Now, as far as the yen goes, the picture is a little cleaner. There's definitely much more positive here, although we couldn't quite hold the 104s. Definitely want to see the 104s hold. The really big number, the really big target for the dollar bulls on the yen side is the 105s. That would convince the market that the sentiment really turns pro-dollar bullish. The market really starts to discount or even anticipate the potential Fed hike, the yield differentials. The story, of course, of all of this will be not this week, but the next week after that, when we have the BOJ and the Fed basically on the same day. First the BOJ in the Japanese morning, and then the Fed in the U.S. afternoon. All of this really coming to a halt. From a technical point of view, this 105 is the big chunky resistance area, and that's certainly something that I think that the dollar bulls are going to want to try and push and test this week. As far as support comes in, of course, 103 is the immediate support. The deeper drop down will be towards the 101s. If we kind of if we really can't make it past the highs of Friday, if the highs of Friday were pretty much the only highs we're going to see, it's a really negative disappointment actually, and it would confirm that the downtrend still remains very much in place. What really on a longer term basis breaks this whole dollar yen downtrend is a close above the 105s. That negates this whole series, as you can see, of lower highs, which still basically shows a downtrend in dollar yen. So we've sort of stopped going down, but we really haven't started going up. That's the critical thing here, and that's why you need to be watching the prices very carefully on this side of the aisle. The last but not least, a very interesting story here. So this is really telling you that Brexit, for now, is a non-starter, meaning that basically all of the woes, all of the hand-wringing about Brexit is really being ignored. Why? I mean, the answer is obvious. The UK has kind of gotten the best of both worlds. They haven't left the EU. They get all the benefit of being in the EU and a lower currency exchange rate, therefore making all of their exports and imports much more competitive. So the irony of the whole thing is that right now they're enjoying this nirvana, but it's a temporary nirvana, and that's the key thing. The market is certainly acting like it's very comfortable and really discounting the Brexit possibility. But my fear is, and it's really a political move here, is if they do actually trigger Article 50, the story is going to change markedly. But for now, what you're seeing technically is a very, very nice base. The lows have been set. The market wants to go higher. All we need is a little bit more positive UK data. We have UK PMI services coming up on Monday. That's going to be a big tell. The really big test of just how little threat the market thinks the Brexit story is this 135 level. Remember, the 135 level was the Maginot line, was the break line, multi-year, multi-decade break line that Brexit broke. So for us to come back and take out the 135 to the upside would be uber bullish, at least for the near-term basis. In the meantime, clearly a very nice bottoming formation with clearly higher lows, clearly sort of a buy to dip. The one interesting thing here is cable strength on a relative basis has been the story last week and probably going to be continue the story this week. It's, we loved pound yen to the upside. We talked a little bit about euro pound. potentially going further to the downside, and it certainly worked last week. I think a lot of those trades still going to continue. So pound on a relative strength basis is going to be something we'll discuss in the crosses. But for now, just know that cable certainly is showing much better price action than all the other majors against the dollar, and that's a very key thing going forward. So that's pretty much how it shapes up. The basic idea here for the week forward is watch the euro, but you really need to confirm for the breakdown. Watch the yen at the 104, 105 level, because that's going to be a major tell of how the market feels. And of course, cable, if it gets any kind of a potential positive move on the fundamental side, could really make a run towards that very, very key 135 level that it has not seen since the Brexit breakdown. Wish you guys the best of luck, the best of trading. Boris, over and out.